Hello, friends. Hello.
Hello.
Hello, friends. Welcome to the very interesting session of an overview on Insolvency and Bankruptcy Code 2016. This is CA Dipti Jain, founder and CEO Gyanstation, welcomes you in today's session. Today we have a very eminent speaker on insolvency with us, CAIP Sunit Shah from Ahmedabad, who is going to enlighten us and throw light on how an professional can crack this, become an IBC. So here is the short introduction of our eminent speaker. CA Sunit Shah is a fellow member of Institute of Chartered Accountants of India. He is qualified IP in the year 2017 and a qualified diploma in Information System Audit ICAI and completed certification course on forensic audit and fraud detection conducted by the Institute of Chartered Accountants of India. He is a certified independent director at Indian Institute of Corporate Affairs. He has been in active practice since from last 18 years and is the founder and managing partner in Messrs. Skies and Company Chartered Accountants. His core area of practice is to manage the corporate insolvency resolution process, forensic audit, bank audits, corporate audits, and tax consultancy. He strongly believes that together we all can grow and sky is the limit to grow. He had acted as a resolution professional and liquidator in the various companies under Insolvency and Bankruptcy Code 2016 across various cities of India. He has delivered several webinars conducted by Committee on Insolvency and Bankruptcy, ICAI, and also at the IBC study groups of Ahmedabad branch of WIRC of ICAI. He has delivered various lectures at educational institutions, including Nirma University and BK School of Management, and various webinars on Insolvency Bankruptcy Code 2016 with various other forums. So with these words, I welcome today's very eminent speaker, CA Sunit Shah, to Gyanstation. The dais is all yours, sir. Please enlighten us with Insolvency and Bankruptcy Code. I'm very sure today we are going to have very deep and minute insights about the topic. Over to you.
Yeah, thank you, Dipti, so much for inviting me to this platform of yours, that is Gyanstation. I will try my level best that through this session, I will take over to the participants the entire process of insolvency and bankruptcy code, starting from the application part to the liquidation process. Although insolvency and bankruptcy code is a big law, but we would try to have this overview on those who are willing to be qualified as an IP or who are already into the practice. They can have an overview of this entire process, how this process is taking place so far as the IBC is concerned. So it starts from the application of taking a company or dragging a company into an insolvency to finally it being getting sold off or it getting liquidated over the period of a time. So step by step we'll go towards it. Thank you so much, Dipti, for inviting. I'll just start with the session.
Honor is all mine, sir, to have you on Gyanstation.
Thank you so much. I'll just be sharing the screen. Let me know it's visible. Then we'll start with the session.
Yes. Is it? This is visible. It is.
Okay. All right. So, Insolvency and Bankruptcy Code 2016. It's as the heading says, or we have termed it as the transformative piece of legislation. We could call several laws and several acts are coming up in India, and with the advent of this BJP and the Modi government, so many new laws have come up which are transformational in nature, and which we can call it as a equivalent to boosting the ease of doing business. What Modi government is all about. So I would say how this is transformative piece of legislation is it was already in existence in several Western countries like Australia, US, UK. This insolvency code was already into existence. Now, Indian government and the Indian law has come up with this process of introducing the insolvency and bankruptcy code to the India as well. It will be called as the transformative piece of legislation. The reason being, it will be a biggest boost to ease of doing business that will happen in India, like various funding process which is applicable, various procedural difficulties which business houses were facing, and because of that, so many procedural compliances they have led it. They have curtailed it or reduced it to the level that each and every businessman or the entrepreneur can have a ease of doing business. So I would say insolvency and bankruptcy code is one of the same, one of these measures to have this ease of doing business. It will be called as a transformative piece of legislation as we go to this session slide by slide. And at the end of this entire process, I would cover this basic principles of the insolvency and bankruptcy code, how the advent of insolvency and bankruptcy code, how it has come up, and how these processes, how the applications are made, how the initiation of insolvency and bankruptcy code will take place, how the process will be conducted, and at last how the company which is already undergoing insolvency process will end up into a resolution process, or it will end up into the liquidation process. So step by step, we'll go forward. And if any of the queries, any of the participant can give it to into the chat box. If that is relevant to a particular slide, we'll try to solve it that very moment. Or even after that, we can have a question answers for a few minutes, and we can solve the same. Apart that, we today I might be a little bit fast because as I said, I want to complete this session so that the entire process of insolvency and bankruptcy code is covered, and I'll try to cover in whatever the limited time frame that have been allotted to me. Okay, so as you would have read that we have covered, we are taking this session into 5 different parts. That was in the flyer that was made for this discussion part, or for this webinar. Here I have concluded, or I have secluded it to the 3 slides, 3 sessions, like overview on IBC, CRP process and the liquidation process, eligibility criteria to become IP, and professional opportunities involved thereof. Although all the 5 to 6 topics that were discussed or which were covered into the flyer are already into that. Although this markings we have done into, and we have divided it into the 3 slides, although these all the 5 discussion points will be definitely covered in this session. Okay, so discussion point is about, first we'll go to the overview on IBC, Insolvency and Bankruptcy Code, which will be actually the transformative piece of legislation. Second will be the CIRP process. Wherever this term CIRP process is used, it will be known as Corporate Insolvency Resolution Process and the Liquidation Process. Third will be the eligibility criteria to become an IP and the professional opportunities thereof. Eligibility criteria to become an IP is not just restricted to the professionals like CS, CS, or the lawyers or the ICWS. It is also extended to the persons like those who are just BCom qualified, and who can also get qualified as an IP, provided they are having a managerial training or managerial experience of 15 years. That will go to the last slide when we come to this eligibility criteria. And what are the professional opportunities once you are qualified as an IP, or even if you are not an IP, or if you are just a professional like BCom or CA, CS, ICWA, or even if the lawyer or the junior lawyers who are not qualified as an IP, even in that case, there are some several professional opportunities that are arising because of the advent of this IBC Code 2016. As I discussed, why it will be a transformative piece of legislation is it will be called a milestone in Indian economy to boost ease of doing business process. Ease of doing business process, although it is termed as an easy task, like it is easy terminology to be called as to bring in the ease of doing business in India. Although we all are aware about so many procedural difficulties or so many compliance processes are involved in conducting a business for this purpose. So this overview on IBC, like Insolvency and Bankruptcy Code, will lead to the ease of doing business. How business processes will be benefited because of IBC will go when we go to this next slide. Business processes are as such a cumbersome process, or the technical or the procedural aspects are involved. Even when we are aware, initially to get a PAN card was a difficult, or it was a time taking consuming process. Now PAN card has become a easy task. Even opening bank account was so difficult now, and it was time consuming process, which has now become easy, that you get a bank account in a single day or within an hour. So similarly, what if a customer, or what if an entrepreneur or a businessman is like lending finance to someone or to the company, or they are into the supplying goods or services to the other customers, how they will be secured of all the amounts they need to recover from the clients or from the customers. So this insolvency, with the advent of Insolvency and Bankruptcy Code, this will be a big boost to ease of doing business process, where a customer or a business entrepreneur or the person who is taking a risk of conducting a business will be secured of the matter that yes, his amount is being safe, and he'll also always have a resort to Insolvency and Bankruptcy Code if his dues are not paid of the amounts that he have lent, or in case he has given goods and services to any of the customers. Why Insolvency and Bankruptcy Code was required in India? It was required in the sense that in India there were so many sectors which are not organized sectors. In Western countries, when we see the businesses are very much structured, and they are like very much organized system of accounting, and for the business purposes processes are taking place, which was not in India. And to give a structure to the organized sector which are not organized, or to comply with the provisions of the law, and to take this process in a easier manner, like when there is a IBC already prevalent, this will give a fear to the person who is taking amount on finance or the goods and services from any of the supplier. There will be a fear of, if they are not able to pay, what IBC will be applicable, how IBC will be applicable to them, and how their company can be dragged into the insolvency or to the liquidation processes. This Insolvency and Bankruptcy Code, because of that, there will be early detection of financial stress or default. Any creditor can report to the default now. So any of the smallest creditor who is not able to recover its dues from the customers or from the companies, they can have early detection of the financial stress that that the company is going through, and they can have a they can report the default, or they can make these company make an application for the Insolvency and Bankruptcy Code. What if, okay, there are several cases that companies already going into the stress or already into the financial state, but that will not lead to any of the results if they keep on dragging the company like this, and along with the financial stress. So that will lead to the early detection, and if possible, let's get a resolution for that. So if a company is already having a stress, let a new customer or a new buyer step in and take over this company and run this company with a better or efficient manner, which will lead to saving of this company, and which will help in viability of the business further. So rather this company going completely into the insolvency and breaking all the laws and all the compliances practices, and then they are shutting down the company, so better it leads to the early detection of the stress and get the resolution for the same. Okay. Okay, so there were Bankruptcy Law Reforms Committee, which will be called as BLRC. BLRC Bankruptcy Law Reform Committee was formed, and they have recommended insolvency and bankruptcy law. There were so many economic reforms that were, so it started basically with the Bankruptcy Law Reforms Committee, which suggested reforms for the this code that is to be taking place, or which was to come into effect from 2016. As long as debt obligations are met, equity owners have complete control and creditors have no say in how the business is. Generally, what happens is when the business was being run and they have taken away the financial assistance from any of the banks or the lenders, in that case, the promoters came into the entire control of this business, and they did not try to take care of the lenders or the interest part. And generally, the accounts were going into the NPAs or becoming non-performing assets. In that case, now there is a biggest shift due to the IBC. If the company is going into the insolvency, the entire company will be taken over. All the creditors of the company will take charge of the company. So now there is a shift from debtor in control to the creditor in control. So the creditor will have a say in the company which is going insolvency resolution process, or they will take a control of the assets of the company, so that any of the company which is trying to not pay the dues, or if they are trying to go into the insolvency by any of the other creditor, the creditor's interest will be same. So several times asset stripping by promoters was done, and which was made aware, or the creditors came to know of this asset stripping, means siphoning of the assets that were happening, which people or which the creditors or the bankers came to know only after the default was occurred. However, due to the advent of the Insolvency and Bankruptcy Code, what happens is, if the company who has already taken loan from the bank, and bank is trying to recover the loans from the customer, and if the customer is unable to pay the dues well on time, in that case they will have a early detection that yes, there is something issue that is going on in a company, or the liquidity issue that is going on in the company, and that will result in the early detection, and consequently saving the promoters from getting this asset stripping done by the owners or the management of the company involved. I would like to say one more thing, all these participants. This is the theory part we are going through. Within next few slides, we'll be going through the entire process, which is very much practical in nature, and that will be much more interesting than all these theory that I am going through. This is just an advent how this Insolvency and Bankruptcy Code have come into existence, and how the process will be run. So it is the primary situation that will lead to the better understanding of the process of the Insolvency and Bankruptcy Code. So why this Insolvency and Bankruptcy Code came in India, and what are the objectives of the IBC? Objectives of the IBC code are very much here in the on this slide. It will lead to the clear and speedy process for the early identification, as we already discussed, of the distress of the companies and the LLPs involved. It will be based on this IBC. If the company is going into the insolvency, the distribution part of the assets of the company, which will be much more equitable, and which will be much more collective in nature, wherein so many all the creditors will be given almost the same rights of the recovery, so far as we have divided the creditors into two parts, like the financial creditors and the operational creditors. So the code has tried to equalize the distribution process of the assets of the insolvent company. There are the institutional framework that has come up. The institutional framework government that they have set up for the Insolvency and Bankruptcy Code is on the right hand side of this slide, which says it on the top there is the Insolvency and Bankruptcy Board of India. Second, beneath it, the IBBI, what we call it as Insolvency and Bankruptcy Board of India, is called as IBBI. Second, beneath Insolvency and Bankruptcy Board of India, there is Insolvency Professional Agencies. Third is the insolvency professionals, who will be taking care of this insolvency of the companies, or who will be handling the insolvency process of the insolvent company undergoing insolvency process. And fourth is the adjudicating authority. So adjudicating authorities here means the courts, and courts will mean the NCLT, that is the National Company Law Tribunal, that is spread and that has been formulated all across the country. So this is the institutional framework. these are the institutional framework that Insolvency and Bankruptcy Code is based. Four, as I've described: IBBI, Insolvency Professional Agency, that is IPA, Insolvency Professional, Information Utilities, and the Adjudicating Authorities. So, information utilities will be the database of all the creditors, all the corporate data of the company. So, information utilities are being set up. The information utility being set up by the IBBI or by the government. The combined process or combined effort is being done so that the because to conduct the insolvency resolution process, so much of data that will be required. And to correct data that is required and where to avail this data. For that purpose, information utilities are being formulated. Information utilities are being formulated so that the collective database of maximum companies will be circulated and which will be available to so many all the insolvency professionals or to the insolvency professional agencies or to any of the concerned who needs this information.
सिद्धा वो स्टेटस कॉल रखा है अभिनव ने, मेरे को बहुत चिढ़ाती है स्टेटस कॉल की सिद्धा।
कितने बजे?
Sunit, please unmute yourself.
Yeah.
Again on mute, please.
Yeah.
Thank you. Thank you.
So this is the diagrammatic representation of why and how it happens, how this insolvency starts and why there is an early detection of insolvency process that can take place. First of all, a company is going into the is already conducting a business since year. There are several circumstances like COVID, which has hit the country to the fullest, or any of the situation like the demonetization process that has come up, or any of the natural calamities that has come up. In that case, the company doesn't remain in operation for a few time, or any of there is a labor trouble, or there are the operational difficulties. In that case, the company can undergo a liquidity problem. If there is a liquidity problem, naturally there will be a delay in operation. Delay in operation will lead to the delay in payments across the board of these companies, like delay in payments to the employees, delay in payments to the various operational expenses that are happening. They will also affect the purchases in the company. Naturally, or if all this is to happen, which starts with the liquidity trouble, that will lead to the disruption in the operations of the company. Or if there is a disruption in the operations of the company, will lead to the operational loss of the company. And finally, it will lead to the erosion of the net worth of the company. So this is how it works. How the liquidity problem will finally lead to the erosion of the net worth of the company. So this is the liquidity trouble, or this we can call it as a stress that the company will be going through before this insolvency resolution process can start. Again, objectives and benefits will be almost the same for the insolvency and bankruptcy code. This because of this insolvency and bankruptcy code, there will be time-bound settlement of the dues of the corporate debtor. There is a body which is called Insolvency and Bankruptcy Board of India, which has been formulated by the central government. So they will keep this Insolvency and Bankruptcy Board of India will keep a watch on the insolvency professional, the corporate debtors, and how this process is being done. So there will be a fair process, and without any of the juggling of the figures by any of the interested parties, like a company or the creditors or the insolvency professionals. This will lead to a better process of the insolvency. Locked up assets which are due because of which are not in working state, the assets because of the liquidity trouble or the disruption in operation will be freed faster than what it would be, rather than keeping the company into liquidity crunch or for the longer period of time, and ultimately resulting into the closure of this company. So if insolvency and bankruptcy code is getting in, or the process is getting in, it will lead to the locked up assets will be able to free, and finally it will be taken over by another company, or it will be distributed among the other creditors as well. It will lead to the faster turnaround of business. Database of serial defaulters will be available. As we said, information utility, in case of information utility, there will be a serial database of the defaulters that will be available. So that can also result into the early detection. More important part will be, it will be protect the workers of the company, say workers or the employees which are into the company, say since long years, and they have all their livelihood dependent on the company. In that case, if that company is going into the insolvency process, the entire livelihood of the workers and the employees will be disturbed. So if there is a company insolvency process, if it is undertaken on such company, there will be a resolution or the liquidation, whatever be the case. In that case, it will be able to, that will lead to protection of the workers right or the employees right as well. And as last but not the least, it will lead to the significantly improving the ease of doing business processes in India. Again, a brief journey of IBC, how it happened, when it started. So 1st December 2016, Insolvency and Bankruptcy Code came into effect based on the US and the UK law and the Australian law. On that basis, they were taken as a base, and from the 1st December 2016, Insolvency and Bankruptcy Code came into came into effect. First matter, January 17th, 2017. So we can see 1st December, this law was, or this code came into effect. And on 17th January itself, the first case of insolvency and bankruptcy code was filed, which was Innovative Industries, which was admitted by the Mumbai NCLT bench. That was the first matter of Indian insolvency regime, which is Innovative Industry. And this case law of Innovative Industries is still taken as a base by several courts and several NCLTs and Supreme Court in India, where this case law is being taken as a base, wherein several landmark judgment and landmark matters were mentioned in this innovative industry. If someone wish to go for this insolvency and bankruptcy court practice, I recommend that Innovative Industries case law should be read in detail, so that the entire process and what was the jurisdiction of insolvency and bankruptcy code, how this came into being, and what were the judgments given into this case, where which were affecting the creditors or the corporate debtor at large. On June 13, 2017, Internal Committee of RBI shortlisted 12 companies for insolvency proceedings. So, why RBI shortlisted 12 companies? It was because of the RBI governs all the banking channels of India. In banking, you would have we would all know as professionals that NPA runs to lakhs of crores, where in the books of accounts of the banks, there are lakhs of crores of NPA that are going on. So RBI, after this advent of IBC, RBI came to know that this IBC will be much more useful to the banker to take these companies which are already undergoing stress, which are not paying their dues, which are already classified as a non-performing asset, to take these companies into the insolvency and bankruptcy code, so that the faster resolution or the payment or dues of this companies which are classified as a non-performing asset can be recovered. On August 16, 2017, IBBI introduced Form F for submission of claim by creditors other than the financial creditor. So this will go in detail in some other slides, where after knowing what is the process of insolvency and bankruptcy code. As we are aware, as the code comes in, along with that comes the amendment. So series of amendments that have come up in insolvency and bankruptcy code as well. First amendment came up into 2020, wherein it was passed by the parliament on 12th of March 2020. This was the first amendment that has come up in the insolvency and bankruptcy code, and post that there are series of amendments that have come up, which has to make this process very much smooth. And in case there are so many difficulties that are being faced by the insolvency professionals, by the corporate debtors, by the directors of the company, and by the creditors as well. So recommendations keeps on coming in to the IBBI, to the insolvency professional, which are further recommended to the government, and which leads to the amendments that are being passed in the insolvency and bankruptcy code as well. Okay, so now we come to the applicability of provisions of IBC. We are going on to overview of IBC and IBC process, how it is done. So this is the first slide where we start with the process. First of all, let us be clear where this provisions of IBC or Insolvency and Bankruptcy Code is applicable. Insolvency and Bankruptcy Code is applicable to, as of now, it is applicable to any company incorporated under the Companies Act 2013 or any of the LLP incorporated under the LLP Act 2008. So as of now, this Insolvency and Bankruptcy Code is applicable to two entities as well, which is company as formulated under the Companies Act 2013 or the LLPs which are formulated under the 2008 LLP Act. Other than those, like the partnership firms or the individuals are already into the act, but they have not been yet notified. So we cannot take the rescue of Insolvency and Bankruptcy Code for the partnership firms or the individuals as well. So as of now, we focus on the companies and the LLP. We consider this as two entities wherein IBC is applicable as of now. In near future, there is a provision or it has already been incorporated into the act, but is not yet been notified. Within the due course of time, I think even the partnership firm and the individuals will be covered into the ambit of this Insolvency and Bankruptcy Code. However, it is not yet been included. The probable reason might be the case that uh, this government or this we are yet not having that kind of infrastructure to handle this insolvency process, because insolvency process needs so much of judicial requirements or the NCLTs to be set up. So many government authorities are being involved into that. So many insolvency professionals, the insolvency professional agencies, management, and the infrastructure involved into that. So once this infrastructure is all set, I think so. Even the partnership and the individual will be included into the ambit of the Insolvency and Bankruptcy Code. So we are clear with where in IBC is applicable. First, IBC is applicable to companies, and secondly to the LLPs. It is divided. IBC for the corporate data is divided into the two-stage processes. One stage is the corporate insolvency resolution process, and second is the liquidation process. First of all, if the company is undergoing the corporate insolvency resolution process, as I would have also used in the last slides, wherein the resolution would be coming up for this company already going under insolvency resolution process, or if any of the company is not able to take over this company which is undergoing insolvency resolution process, in that case the company will go into the liquidation process. Liquidation, and what is the difference between the company undergoing resolution or in the liquidation, we'll again go into the next slide, wherein I'll be going for the details where company how this process of the resolution and for the liquidation is being done. Now we go through an example, say a company ABC Private Limited, as I said, or ABC LLP, applicable to only two entities, ABC Limited or ABC Private Limited and the ABC LLPs or XYZ LLPs. They have taken a loan from the bank, say, amounting to rupees 5 crores. Both these companies or the LLPs, they have taken a loan from a banker with a purview of repaying the same with the interest. So this is the kind of, it starts with that process. That company is going into the business. Their company is going through a good business process. They are taking business to the newer heights, and everything is going right. What happens is, if there is, as we discussed, there might be a liquidity crunch, there might be a process, a situation wherein there is an employee's hustle, or they are not able to effectively manage the affairs of the company. In that case, the the bankers of the company or the bankers who have lended them the amount, in that case, bankers will initiate or decide to initiate the insolvency resolution process against the company or the LLP. So only two things, two persons are applicable. Let us be very clear. The applicant who initiates the insolvency resolution process should not necessarily be a corporate private limited company or limited company or the LLP. So what we have discussed in applicability, in that case, the corporate data, the company who is under stress, or person who is under stress has to be a company or has to be an LLP. It's not compulsorily required that an applicant has to be a company or a LLP. That applicant can be an individual, can be a partnership firm, or any of the entity, can be a trust, can be a government authority. Any of the applicant can file a insolvency resolution process or make an application for insolvency against any of the corporate debtor. Okay, what will be the default amount? Default amount will be it was when this code was enacted. In that case, Section 4 mentioned that the minimum default amount would be rupees 1 lakh. So, if a company or any of the LLP who has defaulted in an amount of rupees more than 1 lakh, in that case, he becomes in case of that much of amount, the applicant to whom that sum is due can make an application against this corporate debtor or the LLP to file an insolvency with the NCLT. However, with this COVID process, with this COVID that has shaken the entire country at large, and the entire corporates or the entire business were disrupted. In that case, the government came up with a notification and stated that if any of the company like having a default of mere rupees 1 lakh, and if those company were forced into the insolvency, in that case they were already having a bigger stress due to the COVID. However, if they were forced to go into the insolvency process, in that case that company would not be able to survive, and they will finally be liquidated, or they will be dissolved, or that business will definitely die. So that government immediately came up with a notification to section amendment notification to Section 4, stating that the default amount was increased from rupees 1 lakh to rupees 1 crore. So if a corporate debtor like a company or a LLP is making a default of minimum amount of rupees 1 crore, in that case the applicant will be eligible to file a insolvency proceeding against this company or the LLP. Liquidation process, again, if the company is unable to have this corporate insolvency resolution process effectively done, or in case the resolution is not being availed in this case, or if another company is not able to take over this process or this corporate debtor, in that case the company will go into the liquidation. That we'll discuss further. So we discussed with the entities who are wherein IBC is applicable, the minimum threshold limit is 1 crore. Now we come to the next stage of process, that is the procedure for admission of insolvency of the corporate debtor and the demand notice thereof. Okay, IBC coverage. IBC is covered is basically divided into two parts. One is the default cases and the non-default cases. First is, what are the default cases? Default cases, as we discussed, these a company or a LLP who is making a default. Default is being done in two ways, like if he is unable to pay a financial debt to any of the banker or any of the lender, or second is the operational creditor, means if he has availed goods and services from any of the customer and company, and if that company is unable to pay those dues towards goods or services, in that case it will become an operational creditor. And third will be Section 10, that will be a company if they are unable to pay the dues and they themselves know that they are going towards this stress. In that case, Section 10 will be applicable, and company itself may decide to go into the insolvency process. That will be covered under Section 10. So Section 7 will be a application made by a financial creditor. Section 9 will be the company application made by the operational creditor, and third will be under Section 10, in which case a company itself plans to go into the insolvency because it's unable to bear the stress of the company, stress of the operation of its businesses. Second is also the non-default case. Why now we'll wonder how a non-default case can also go into be covered into the insolvency and bankruptcy code. A non-default case is like if a company is already also not having a default. In that case, also a company can decide to opt for this insolvency and bankruptcy code and go for a voluntary liquidation process, wherein there has to be given a no due certificate to the insolvency professional or to the NCLT, wherein they need to state that, okay, although we don't have a default, but we don't wish to continue with this company because the businesses are not running, or there might be several reasons. Maybe there are the personal reasons of the promoters, even in which case they wish to shut down this company. In that case, they can also prefer insolvency and bankruptcy regime and plan for this insolvency and going into the voluntary liquidation of the company. Who can invoke corporate insolvency resolution process is the financial creditor under section 7 of the IBC, as we discussed, operational creditor under section 9 of the IBC, wherein the dues of the supply of the goods and services are pending, or in case of the corporate debtor or the company or the LLP itself under section 10, as we discussed, that if they are of the opinion that they are going under the stress and they'll not be able to pay all the dues of the creditors, and they will be ultimately dragged into the insolvency. So before any of the creditors drag them into the insolvency, they themselves decide to take themselves into the insolvency resolution process and declare themselves insolvent and get these process of insolvency either through a resolution or through a liquidation and finish off this company. Who can initiate corporate insolvency resolution process are the bankers, the NBFCs, or the other private financiers who have given loans, maybe secured or unsecured, credit card, or the personal loan. So this is the definition of the financial creditor under section 7. So who can initiate CIRP are the financial creditor. Who will be termed as a financial creditor will be the persons who have given actual loan amount to the customer or to the corporates like the bankers, NBFC, who have given actual funds to run the business. They will be called as so bankers will be termed as a financial creditor. Persons who have supplied materials or given any services to the corporate debtor or the company or the LLP, in that case, they will be termed as an operational creditor. And also the employees or the workers will be called as an operational creditor, wherein if the dues of or if the salaries of the employees are not being paid, which are exceeding rupees 1 crore, and in that case, they can also become eligible to file an application of insolvency against the company. Central or the state government authority who have to recover tax. So several cases, income tax, the GST department, wherein the tax or the demands are due and corporate debtor is unable to fulfill the due. In that case, also the government or the central government or the state government can initiate an insolvency resolution process against this corporate debtor, and they will even the central and the state government will be called operational creditor for this purpose under section 9. And company or person itself who thinks that it cannot repay that is under section 10, corporate debtor itself. So when we are starting with the insolvency, again we go through this all the slides that we have discussed is first of all any of the applicant. We consider this word as important. Any of the applicant means any of the individual partnership firm or any of the person can initiate a CIRP against the corporate debtor. Who will be the corporate debtor? Will be the company and the LLP. What should be the default amount? Default amount should be exceeding rupees 1 crore, which was 1 lakh in the past. Now the default exceeding 1 crore. And who can initiate a CIRP? So what will be the category of the applicants? Will be the financial creditors, the operational creditor, and third, that will be the corporate debtor itself. So there are the three categories. We have gone through all three slides. We have come to a stage where now application will be filed against the corporate debtor. By whom that will be filed is already discussed. Where it will be filed and what will be the process thereafter, we'll be discussing in the further slides. Quickly going to the financial creditors definition. Again, it's the same. Financial creditor is a person to whom a financial debt is owed and includes a person to whom such debt has been legally assigned or transferred. In any case, there has to be a time value of money to be called as a financial creditor. If someone has given a loan free of cost or without interest to any of the person, in that case, there will be no time value of money, and that person or that applicant will not be eligible to be called as a financial creditor of the company. So to be called as a financial creditor, amount should be given. First, it should be bearing interest, and third, it should be having a time value of money, and the amount of default should be exceeding rupees 1 crore. In that case, he becomes a fit case for the financial creditor. Now, again, a financial creditor can be an individual, partnership firm, or a corporate debtor, or a company, or any sort. So they can be called as a financial creditor. Second, as we discussed, operational creditor. Again, operational creditor will be a person to whom an operational debt is due and includes a person to whom such debts has been legally assigned. So I, as a individual, has sold certain goods and services to a company, say XYZ Private Limited, and exceeding my dues are exceeding rupees 1 crore. I become an operational creditor, and I can file an application against that company ABC Limited, ABC Private Limited, or any of the LLP from whom I owe this sum to be recovered. Third, as we discussed, the operational company itself, how this process starts, and who is to start the process is discussed. How this process start, say if a operational creditor or the financial creditor are not getting their funds from the company, in that case they will issue a notice to the company stating that, "Okay, my funds are due, you need to pay this amount within 10 days or the 15 days." So such kind of demand notice or an intimation will be sent to the company stating that, "Okay, my sum is due, you give me the sum, or else I will be forced, or I will be initiating an insolvency resolution process against you." So once that 10 days are over, or a sufficient time is getting over in case of financial creditor or the operational creditor, and even if that company is not paying the dues, in that case a applicant, which may be financial operational creditor, they will file an application with the adjudicating authority. Who will be the adjudicating authority in this case will be the National Company Law Tribunal. National Company Law Tribunal are set up in several states and several cities across the country, wherein wherever the jurisdiction of these corporate debtor is going on, we need to file an application with the particular NCLT for commencement of the insolvency resolution process. Which NCLT will be the which adjudicating authority or the NCLT will be applicable. So here it has been mentioned that wherever the registered office of the company, wherever the registered office of the corporate debtor is situated, in that case, the relevant NCLT will be applicable, and the application will be made to that respective NCLT. For example, a company XYZ Limited is based at Chennai. In that case, if that company is making a default, I sitting in Ahmedabad, Mumbai, or I am not able to get the dues which are due to me, and if that company is not paying that amount, in that case, Chennai company ke upar will file a NCLT, will file an insolvency proceedings application, and for that purpose, that being ABC Limited or XYZ company which is based at Chennai, so the relevant NCLT will be the NCLT in Chennai. So I will have to file an application, although I'm based in Mumbai or Ahmedabad, I'll have to file an application with the NCLT Chennai. So several hearings will take place, and so even that right of being heard will be given to the company also after this application is made by the applicant. In that case, the several hearing, after having several hearing that took place, post that, if NCLT of the judges of the NCLT is of the opinion that yes, this is the fit case for the insolvency commencement, in that case they will make an order, and the CIRP will be triggered. The corporate insolvency resolution process will be triggered. Corporate insolvency resolution process will be triggered. Along with that, appointment of insolvency resolution professionals like us will be done. And insolvency resolution process, whoever is termed or named in the order will be acting as an insolvency resolution process, and the entire company or entire charge of the company will come into the hands of the insolvency resolution professional. Insolvency resolution professional is again bound by several duties and the responsibilities. Also, he's having so many rights. So as he's having so many rights, he's also bound by so many obligations and the duties. Post this application is being admitted by NCLT. In that case, once this IRP is being appointed insolvency resolution professional, and the intimation is being done to the insolvency resolution professional, interim resolution professional has to make a public announcement inviting claim of the creditors from the company from the corporate debtors creditors. So a public announcement will have to be made by a insolvency resolution professional. Post on the basis of the post on the basis of the public announcement that is being done, several claims will be received. What will this public announcement be all about? This public announcement will be all about stating that whosoever are the creditors of the company and wherever the company's creditors are dues are pending, they need to submit that claims to the insolvency professionals resolution office, and or through a mail or through a physical means. So once these claims are being received, once the creditors' claims are being received by the insolvency professional, the collation of the claims will be done, the verification of the claim will be done, and once these claims are being admitted or they are verified and they are found to be correct, insolvency resolution professional will admit the claim and they will make a list of the claim. List of the claims of the creditors whatsoever have been received by the IRP, insolvency resolution process professional. What will be the next stage will be they will several meeting of the committee of creditors. So once these claims have been received, the committee of creditors will have to be formed. A committee of creditors will be formed, including the financial creditors and the operational creditors. However, operational creditors will not form part of the meetings of the committee of creditors. They will not also have a voting rights. However, financial creditors will have all the voting rights, and the constitution of committee of creditors will be filed with the respective NCLT. Once also, along with the publishing of the public announcement, secondary appointed RP shall have to take over the affairs of the company within 7 days, or they will have to or they have not mentioned the days, but somehow they have to take the charge of the assets of the company immediately. Once the order has been passed, the appointed RP has to take the charge of the assets of the company, meaning thereby he has to take the charge of the assets, physical assets of the company, even the bank accounts of the company. He also needs to intimate to various authorities stating that insolvency proceeding has been started against this corporate debtor, and I have been appointed as a insolvency resolution professional for this purpose. Also, they need to take the insurances of the company's assets, wherein if the insolvency professional is of the opinion that this without taking an insurance that company's assets might be at risk, in that case he also needs to take the insurance of the company, has to deploy the security guards if they are of the opinion that without deploying the security guards the assets of the companies might be at risk. So meaning thereby the IRP has to take care of the company as if he is operating the company from that day onwards. Also, you need to prepare the information memorandum based on the claims received, and also based on the so much of the data that you would have come across or he would have accumulated. On that basis, he has to make the information memorandum stating that what are the assets of the company and what are the claims that have been received from the creditors. Next will be inviting expression of interest, and post that approval of the resolution plan. Again, that is the next part of this CRP process. That will be the end part of the CRP process. That will be taken specially in the next slides. This we discussed will once this application has been filed, NCLT will assure notice to the, after giving a right of being heard even to the company who is in default, will and after hearing all the objections and arguments, the application would either be admitted or dismissed. There are chances also where NCLT or the judges of the NCLT are of the opinion that yes, this claims made by the applicant or the application that is being made by the application is not worth to be admitted, or the dues are not justified by the corporate debtor, that application is made wrongly. In that case, even NCLT may dismiss the application made. IRP proposed by financial creditor means whatever IRP is being proposed by the maybe proposed by the financial creditor or the operational creditor. In that case, once the order is being received, that IRP will have to be appointed, will be called as appointed from that date, and that post that he will be able to take the charge of the assets of the company. it is compulsory to note that in case of the application made by the financial creditor, in that case, the proposal of the name of the interim resolution professional has to be made compulsorily. However, in case of the operation creditor application that is being made, it is not compulsory to mention the name of the interim resolution professional in the application itself. So what happens in case the application does not contain the name of the interim resolution professional? In that case, while admitting the application, NCLT will take or will select a name, suo moto select a name from the list maintained by the NCLT for this purpose, or they will avail the name list from the IBBI, and whatsoever they deem fit, NCLT will be appointing the interim resolution professional in that matter. And accordingly, corporate insolvency resolution process will start, and followed by the public announcement and inviting claim from the creditors and taking charge of the company. Okay, what is the effect of this order getting into place? Once this order is being made, there is a moratorium. This is a very important chapter of this insolvency and bankruptcy code, which will be a moratorium under section 14 of the IBC code. What moratorium actually says? Moratorium is the situation or a place or the time being which will be for 6 months. This effect of moratorium will be the company will be prohibited to take any of the suits or to conduct any of the suits or make a legal proceeding against any of the other person. Similarly, even no other person or no other government authorities wherein also the matters are being pending, no other suits or civil suits or the proceedings will be taken over against this company as well. So what it means that once this company is being admitted into the insolvency resolution process, no cases can be filed against this company. So company will come into a breather, will take a breather. एक वो शांत पड़ जाएगा, उतना period वो शांत रहेगा, wherein let this company or the insolvency professional, the creditors take a stand that already that company is into the stress. Why again few more matters will be coming up against the company, court matters चलेंगे, again few more suits will be filed against this company, and in that case that company's resolution will not be effective. So for 6 months period, that company comes into the moratorium phase, and in that case, no suits or proceedings can be taken against this company. So this will be the what will be the period of the moratorium will be 6 months. 180 days is actually the process for the insolvency which is to be completed. So naturally 180 days this company will remain into the moratorium phase, and no other proceeding or any of the company's acts will be or suits will be taken against this company, or even company cannot take against any other person. More important is the second point, that is transferring, encumbering, alienating, or disposing of by the corporate any of the assets or legal rights. So any of the assets of the company during this 180 days, they cannot sell off, or they cannot alienate any of the assets of the company. Naturally, these assets of the company will be into the charge of the insolvency resolution process. So naturally, transferring, encumbering, or alienating any of the assets is not allowed. So this is third will be any action to force or recover or force any security interest cannot be done by any of the bankers. No process can be done by the bankers for recovering the dues. No process can be done under the by the bankers under the SARFAESI Act also. So section 14 will provide for the moratorium of this company, and once this moratorium is into the place, all these effects will be and prohibition, it kind of a prohibition, or it will be called a kind of a company will be given a breather, or they will be given a comfort to think and decide what are the next steps or next stages of process that can be done against this company as well. However, all the essential goods or services, that what is the definition? It has been defined by essential goods and services mean electricity, water, telecommunication services, and information technology services. All these four essential services are being termed into the law, wherein although there is an effect of moratorium that is happening or the company is already undergoing insolvency resolution process, these four kind of services cannot be stopped for the corporate debtor as well, although that company is not into the operation. Procedure or admission of insolvency of corporate debtor will be first, as we discussed, that will be the public announcement as per section 15. Public announcement will have to be done by the insolvency resolution professional as per section 15. What will be the details of the public announcement will be shared soon. Secondly, as we discussed, that intimation to all the various authorities has to be done by the insolvency resolution professional. Insolvency resolution professional will intimate to all the authorities of the corporate debtor, like the GST department, like the ROC, or the income tax department, or whichever the department that are applicable to the corporate debtor. That insolvency professional has to intimate about the initiation of the insolvency, and if any of the claims are pending against the company, to provide the claims to provide the same to the insolvency resolution process. Third will be the taking charge of the assets of the company wherever located into the country. So whatever IRP has to take the balance sheet into consideration, the last balance sheet as on CRP date, which is being available, or which he needs to make available from the directors of the company, and they have to take charge of the assets of the company as mentioned in the balance sheet wherever situated across the country. That will include the bank accounts and the physical assets of the company. Also, if that company is having the cars, for example, or any of the vehicles, or the scooters, or four-wheelers, or the or say if the company is into the transportation business, if they are having so many trucks or any of the godown, in that case, all the assets of the company will have to be taken charge of by the IRP. The next will be the receipt and the verification of the claim. So public announcement will require each and every person who is having due against this company, or having uh, the or whatever amount due from the company, they need to file this claim with the insolvency resolution professional. And on this receipt of the claims, insolvency resolution professional will verify the claim and admit the claim, and further constitute a committee of the creditor. And within 30 days of the CRP initiation date, they need to hold a first meeting of the committee of the creditors. Public announcement, as we discussed, public announcement has to be made in Form A under Regulation 6 and Section 15, which states that it has to be published into the English language, and another is into the vernacular language. Vernacular language means wherever this corporate data is being situated, like a company situated in Hyderabad. In that case, the public announcement is to be done in Hyderabad city, in the English newspaper, and second in the vernacular language. And so naturally the public announcement will have to be made in one in English newspaper and one in the Telugu newspaper in Hyderabad, where this corporate data's registered office is situated, or in case the main operations of the company is into the other cities as well, like say Mumbai. In that case also, the public announcement will have to be made into the city of Mumbai, wherein the wherein the publication will have to be done in English and in the Marathi newspaper as well. So that is the discretion of the IRP, wherein this public announcement has to be made other than the register, where the registered office of the corporate data is situated. This public announcement, as we discussed, will state that any of the person who's having claim has to file the claims to the insolvency resolution professional in prescribed format. There are formats for submitting the claims, and this has to be done either by a mail, that is by a soft copy, or by the hard copy as well. Again, there are regulations. Financial claims are to be compulsorily made in this electronic format, that are the soft copy, and the operational dues, or they can be submitted in by any of the means, like soft copies or by the physical formats. This public announcement is done for 14 days, and within 14 days, the claims are to be submitted to the interim resolution professional. Intimation to various authorities like income tax, GST, ROC, NSDL, CDSL, and SEBI. For example, if that company is a listed company, in that case, NSDL, even the intimation has to be done to the NSDL, CDSL, and even to SEBI, wherein on the website of the BSE or NSE, the exchange will provide the information that this company is undergoing an insolvency resolution process, so that all the investors of the company can be aware of the proceedings that are taking place against this company. Receipts of the claim. Once the claims are being received, verification will be done. Verification, how the verification can be done of the claim, whether these claims are correct or they are not correct. Verification has to be done on the basis of the balance sheet of the corporate debtor as on CRP date. So, IRP has to avail the balance sheet of the corporate debtor as on CRP date, and in that case, the verification of the claims has to be compared with the has to be done with the amounts appearing in the balance sheet. If there are discrepancies in the balance sheet figures and in the claims that have been submitted by the creditor, IRP has to get a clarification of the same, and also they need to reject or accept the claim after the clarification has been received from the creditors. This list of creditors will become a public document, and this claims has to be uploaded by the IRP on the website of the corporate debtor if available, or on the or with the IBBI website that is available. Or this claim list has to be made available to all the creditors or the committee of creditors that are forming part of this corporate insolvency resolution process. Verification. While having verification of claims, there might be cases where conflict might arise between the COC and the RP on the related party. If the related party's claim have been received, the related party's claims are not to be accepted. They are to be accepted, but they will not form part of the committee of creditors. There might be cases where the late submission of claims, say we have decided on the date that 5th of the December, this is the final date to submit your claim. However, several cases there might be wherein the creditors are coming up with the late dates of the filing of their claim. In that case, what is to be done, that will be governed by the law, and that will again be decided by the committee of creditors, that whether a late claim has to be accepted or not. However, a law provides that even if some of the creditors fail the date of the claims to be submitted within 14 days, in that case, 90 days is the time prescribed for from the date of the CRP to submit that claim. In any case, they are not able to file the claim. Post all the claims have been received and all the reconciliations have been done, and there has been acceptance from both the sides of the claimants and the on the interim resolution professional, and on the basis of the documents being verified, a list of claimants is being prepared, and finally a constitution of committee of creditors is being made, which can be divided into the financial creditors, the operation creditors, the employees claims, the government claims, and so on. Like a list of the claims or the breakup of the claims is being prepared, and on that in that cases, financial creditors, all the financial creditors will form part of the committee of the creditors, and a notice will be issued to the financial creditors wherein the first COC meeting will be held. So in that case, operation creditors claims are being accepted. It's not like that where they are not being called into the committee's meeting, their claims are not being accepted. Their claims are being accepted. Their even the government claims are being accepted. The employees claims are being accepted. But wherein the meetings are being held, the invitees will be only the financial creditors, and financial creditors will only have the right to vote for the any of the resolution process that are being done, or by the or any of the resolutions that are being to be passed. In that case, only financial creditors will have a voting right. As we discussed, the first committee of creditors meeting has to be done within 30 days of the corporate insolvency initiation of the corporate insolvency resolution process. Once this quality of claim, the taking charge of the assets of the company, having a public announcement, post public announcement, collating the claims, making a committee of the creditors of the list, uploading the list on the IBBI website and everywhere wherever possible. After that, the first meeting of the committee of creditors is to be held compulsorily within the 20 days of the corporate insolvency resolution process. So, first committee of meeting of creditors has to be held in accordance with the law. The notice of this holding first committee of creditors meeting has to be sent minimum 5 days before the date of the meeting, and which has to be compulsorily falling within 30 days of the CRP process, initiation of the CRP process. If that is not being done, there might be cases of the creditors raising concerns against the IRP, stating that the notice that has been issued is not valid and it was invalid notice. Say IRP issues a notice 3 days or 2 days before the meeting of first committee of the meeting. In that case, the notice will be regarded as invalid, and hence further even the committee of creditors meeting will be regarded as the invalid meeting. Who can attend the committee of creditors meeting is the all the invitees, that is the financial creditors of the company. All the promoters and directors of the company will also form part of the meeting of the committee of creditors. However, promoters and directors will not be having any of the right to say anything in the meeting. They will just be the observers in the committee of creditors meeting. They will not have a right to vote. They will not have a right to suggest anything to the insolvency resolution professional or to the committee, or they will just be observers of this meeting. If they are asked few questions by the committee, they have to reply these questions. So as we can see, because of the effect of this insolvency, the rights of the board of the directors are being diminished. The board of directors also gets suspended under section 17 of this IBC code, where they will not be having any rights. Although it was their company, they were running the business or the affairs of the company, and within this ambit or within this process of insolvency getting triggered, they are out of this business. Their board of directors get suspended. They do not have any of the voting rights. They do not have any of the signature right, or they do not have any rights in any of the decision making process. So they are out of this business. They are out of this entire setup. They were taking it over here. So this is the effect of the insolvency process that is being initiated even against the directors or the promoters of the company. COC meetings, COC members may meet in person. COC members may meet in person or through virtual meeting. So it's not compulsorily that COC meeting has to be held by. COC meeting will be held by always in a physical mode. That can be done through a virtual mode also. All meetings of the committee of creditors shall be conducted by the resolution professional. They need to give notice. RP has to give notice to the financial creditors, operational creditor, and members of the suspended board of the partner or board or partner of LLP. Operational creditor, why it has been mentioned, as I said, the operational creditor will not form part of the committee of the creditors. However, if operational creditors, the total operational creditors claim which have been received, if the debt of those operational creditors is more than 10% of the total debt, if the claims of the operational creditor are more than 10% of the total debt or total claims received, in that case, operational creditor will be given a notice to attend the committee's meeting. However, again, I would say that operational creditor will, although they are attending the meeting, they will be part of the meeting, but they will not have a right to say anything. They will not have a right to vote, or they will not have a right to suggest anything to the RP or to the committee of creditors. Similarly, will be the case for the directors or the promoters of the company. one thing is decided: financial creditors will form part of the committee. They will have the voting rights. They will be having the voting rights for all the resolution. So basically, what when we are talking about the voting rights, what kind of voting and where they have to vote. So in that case, several resolutions will have to be passed by the committee of creditors and by the interim by the resolution professional, by the insolvency professional and committee of creditors will be working together for this entire company. So several decisions will have to be taken, like what the sale is to be made, what the purchases are to be made, how the employees are to be paid, if there are already employees existing in the company, what are the security options that have to be done, and several other decisions to run the affairs of the company, how the assets have to be secured. In that case, several cases there has to be a resolution that has to be passed, and in that case, decision of the financial creditors is important. And in that case, 67% of the majority. 67% of the majority of the financial creditors decision will help any of the resolution to get approved. In majority of the decision, it's 67% of the majority. However, if that application of this CRP is to be withdrawn, in that case, 90% majority of the committee of creditors voting will be required. There might be cases where there is an appointment of resolution professional is to be done, for the replacement of the resolution professional is to be done, for approving the expenses of the corporate insolvency resolution process. In all these cases, decisions have to be taken and resolution has to be passed. For that purpose, 67% of the voting rights of the committee of creditors is required, so that the resolution gets approved. And on the basis of the resolution that are being approved, resolution professional will be able to carry on the process of this CIRP. Now we quickly go to the powers and the duties of the resolution professional. As stated, there are several lot powers given to the interim resolution, the resolution professional. So naturally, where comes power, there also comes the duties. And as discussed, RP will take over the management of the corporate data. Power of the board of the directors of the company will get suspended. So section 17, as we discussed, it will be the major impact on the company's affairs, wherein the board of directors will get completely suspended and they will not be having any right of taking decisions thereafter once the order is being passed. Officers and the management of the CD will report to the RP. So till date, the officers and the entire management of the company was reporting to the directors of the company. However, from now onwards, from once the charge is being taken, the entire reporting will be done to the resolution professional. Resolution professional is having a right to access information from third parties which are relevant to the CRP, depositories, professional advisors, the information utilities, wherever information is being available about the companies, about the members, about the promoters, or the partners of the LLP. He has the right to take all these decisions, and he also has the right to access all the information from wherever available, so that he can run the CRP in a smooth and the effective manner. What are the duties also? He has to, it is not like that the company has to be compulsorily shut down or the operations have to be stopped once this company goes into the insolvency process. Once this RP takes over, he has to manage operations of CD as a going concern. So if that company was in operation before that the order get passed, in that case, it will be the duty of the resolution professional to manage the operation as a going concern only. So he will have to continue with the operations of the corporate data, wherein if the employees are to be taken care of, if there is a machinery breakdown, if there is has to be made a purchase, if there has to be a sale, in that case, that all these operations will have to be done by the resolution professional, obviously with the help of the team or with the managerial people or with the employees which are existent, which were into the existent in the company altogether already. Also, he has to, as discussed, he has to preserve and protect the assets of the company, represent and act on the behalf of CD with third parties if there are representations which have to be done. So it's a big business, it's a factory, or it's a big import export setup that company has gone into the insolvency and RP has taken over. In that case, he has all the rights and also be the duty to represent and act on the behalf of the CD with the third parties itself. He can raise interim finance as well. So in case for running the CRP process, there might be a requirement of funds and there might not be availability of funds into the company. So he has the right to raise this interim finance also. He can appoint the several accountants or legal or the other professional as well, like the valuers, transactional auditors and auditors or the statutory auditors, wherein he needs to get all the compliances done. So once this company is into the insolvency process, it doesn't mean that the compliances compliances will be stopped and they are not to be done. The compliances will have to be continued, and it will be the duty of the insolvency professional to get the compliances of this company, which is already into the CRP done. He has to keep on maintaining the updated list of all. There might be chances that first list of claims have come into within the 14 days. However, after 14 days, there might be several claims that have come up and which can be accepted up to the 90th day. So he'll have to maintain all the updated list of claims. All the meetings, he has to convene and chair all the meetings of the COC, and he has to circulate minutes within 48 hours as required by the company's law. Also, it has to be abided by in the insolvency resolution process, wherein he will become a chairman of all the meetings of the COC, and he has to circulate minutes, whatever decisions that have been taken into the committee's meeting. He has to prepare information memorandum, which will consist of the entire list of the assets of the company that he has taken in charge or which were occurring in the balance sheet. Also, whatever claims that have been received will have to be mentioned in the information memorandum. Whatever be the contingent liabilities or any of the other information which are relevant has to be made. An information memorandum will be a comprehensive document for taking this CRP process further. Invite our lenders, investors, and other person to put forward the resolution plans. Resolution plans are about the taking over of this company. We are immediately going in the next slides, wherein the process of the resolution plans will be taken up. Where if the resolution professional has to give a public announcement into the newspapers to the effect that if any of the company or any of the corporate debtor or any of the groups of the company is willing to take over this company as a stressed company which is undergoing insolvency resolution process, those interested buyers have to put up their resolution plans, and those interested buyers who have to prepare and present a resolution plan to take over this company will be asking for the information. So naturally, the resolution professional has to lend them the information, which will be in the form of the information memorandum. Information memorandum, they will be giving it to the potential resolution applicant or who are willing to buy this company, so that they can take an informed decision as to at to what rates how this company is to be bought, or they have to be take over or to be merged or acquired from the resolution professional or from the creditors, so that they can take over this company and run this company. Also, if the resolution professional is of the opinion that so many assets would have been or any of the financial transaction which would have been fraud driven in the past, in last say 2 to 3 years, there might be chances that promoters of the company or the stakeholders of the company would have tried to evade taxes. They would have tried to alienate the assets of the company, or would have tried to use the funds of the company to to the related parties as well, so that in that case there might be chances that it's not just about the stress that has led to the company to the insolvency. There are chances जहाँ पे fraud की वजह से भी ये company insolvency में जा सकता है. So it will be the duty of the insolvency resolution process to decide or to state that if there are any such transactions that have taken place into the company in last 2 to 3 years, or he can get this forensic audit kind of to be done by any of the other professional agencies or the professionals, chartered accountants or the forensic auditors or the transaction auditor he can employ or he can hire, where to get the report of the transaction or the forensic audit done to ascertain whether if any fraud has taken place into the company by the stakeholders or the promoters as well. So newspaper advertisement is being given in inviting expression of interest from the potential resolution applicants. Once these once this UI has been published in the public in the newspaper, there might be buyers who are interested to take over this company. What will be, who can prepare and submit a resolution plan will be any of the financial creditors who are the part of the CIP process can also submit a resolution plan. Any of the operational creditors who are part of this resolution, the CIP process, or the employees of the company can submit a resolution plan to take over this company. Corporate debtor himself, if there is corporate debtor cannot take over this company if it is not just a MSME. Corporate debtor himself means the promoters or the directors, existing directors of the company are not allowed to take over this company, because in that case, if they are allowed, it will be a back route for them, wherein there is lot of default that has occurred and they are again coming back to the company, which is not allowed on the helm of the affairs of the company. They are not allowed to enter in. Here we have mentioned corporate debtor only in case there is an exemption, wherein if the company is an MSME company defined, which is a as per the MSME Act, whatever the MSME provisions they, or the threshold limits they have defined. In that case, the corporate debtor, the promoters or directors of the company can bid for this company. If it is not a MSME company, no promoters or the directors of the company can bid for the resolution or to take over this company. Committee of creditors, any of more of the shareholders of the company, employee of the CD, any of the person who is willing, or maybe a corporate debtor, means a corporate or a partnership firm or a LLP or an individual, there is no bar to any of the resolution applicants. So anyone willing to take over this company at an agreed price in a norm, they can take over and submit a resolution plan for the same. So once the resolution plan has been received by the resolution professional, eligibility of the resolution applicant has to be checked. Eligibility will be has been mentioned under has been prescribed under section 29A of the Insolvency and Bankruptcy Code, wherein it states that resolution applicant should not be undischarged insolvent. He should not be a willful defaulter. That resolution is already not into the NPA list of the bankers. They have not been convicted of any offense. They have not been prohibited by any SEBI. If any of the director who is willing, or any of the director of the resolution applicant should not be disqualified to act as a director, or any of the person connected to with all the related parties. Related parties, as I discussed, section 29A prohibits the related parties of the corporate debtor to again come into the management of the company by submitting a resolution plan and taking over this company, which is not allowed. Only, as I said, MSMEs are excluded, wherein MSMEs, in case of MSMEs, the directors or the promoters of the company will again be allowed to enter into the company by submitting a resolution plan and taking over this company. Okay, now next stage will be, what if any of the resolution plan is not coming up, or it's not a eligible resolution plan is not coming up. or in any case, if a resolution plan is coming up and that is put among the, so what happens is that resolution plan will be put up by the resolution professional amongst the committee of the creditor for its approval. So it's not by the resolution professional cannot approve the resolution plan suo moto. They resolution professional will put the resolution plan amongst the committee of creditors for its approval, wherein it will be stated that resolution applicant wish to buy this company at at a specific price. So that price will be put up among the committee of the creditors, and if the committee of creditors approves the resolution plan, in that case, the handing over process of the entire company will be done to the resolution applicant who has come up to take over this company. What if this resolution plan is not approved, or the amount which has been offered by the resolution plan is lesser than what has been expected by the committee of creditors? In that case, the committee of creditors will reject the resolution plan offered by the resolution applicant. And once the resolution plan is being rejected, in that case, the company will move into the liquidation process, and the entire liquidation, instead of the resolution process, the entire liquidation process of the company will start, and the resolution professional will become and will act as a liquidator in the further case, wherein the committee of creditors will appoint him as a liquidator to continue the process of this company. So once this resolution plan, approving of the resolution plan is an important task that is to be done, or important decision that has to be taken by the committee of creditors. And in that case, if they are not approving the resolution plan, in that then the company will move into the liquidation, and the liquidation process will initiate. Quickly going through this liquidation process. What is the liquidation process? Is once the appointment of liquidator is done, again the almost the same process of the CRP will be done in the liquidation. Liquidator is supposed to make a public announcement in this case, again calling for the claims from the stakeholders, or from the from the creditors. He will make a public announcement to the effect that whosoever having the dues from this company can file a claim with the liquidator of the company. Although there is a separate form prescribed for this liquidation process that compared to the CRP process, uh, preliminary records to the adjudicating authority he will have to give. So again, the list of the assets of the company and the claimants of the company, like whatever claims that have come up, and the creditors of the company, that will have to be submitted to the adjudicating authority. Again, verification of claims is part of this liquidation process as well, along as equivalent to the CRP process. Appointment of valuers will have to be done. Similarly, like CRP process, we missed on the CRP process, wherein also the insolvency professional has to appoint a valuer, so that the valuer of the entire business enterprise or the corporate debtor will have to be done. Three types of valuers can be appointed. One is for the plant and machinery, from the land and building, and third will be for the securities and financial asset. Three valuers, category of three valuers, and two valuers for each class of assets. So total 6 valuers will have to be appointed for the CRP process. Similarly, for the liquidation process, if liquidator is of the opinion that valuation derived during the CRP process is not in sync, or if he is of the opinion that again a liquidation valuation will have to be done, because in this 180 days there might be chances that value of few of the assets would have changed. In that case, a liquidator will again appoint valuers, two independent valuers in three class of assets, and get the valuation done. The main difference between the CRP process and the liquidation process is that wherein in case of getting a resolution during CRP, the entire company is being sold, and during the liquidation process, the entire company is not being sold. Only the assets of the company are being sold in parts, and that through a private sale, or through a e-auction process. So this will lead to the closure of this company liquidation. However, the getting a resolution in the CRP process will lead to the continuation of the business of the company. This is the main difference between the liquidation and the resolution process. Okay, so once the proceeds are being received, from the sale of the company through a resolution or through a liquidation, in both the cases, that amount will be distributed amongst the creditors of the company in a particular fashion. And that fashion is defined by the law, wherein Section 59 of the IBC code states a waterfall mechanism that has to be followed by a liquidator, wherein the proceeds of the assets of the company will be distributed amongst the creditors in following fashion, wherein the process cost or insolvency process cost or the liquidation cost will be first met. Second will be the secured creditors will be paid along with the workmen's dues will be paid in priority to any other dues. Third will be the employees and wages to unpaid workers for more than 12 months preceding the liquidation commencement date will be paid. Then comes the unsecured creditors. Then comes the central and state government dues and any other parts of dues. Then comes the preferential shareholders dues will be paid up. And if anything remains, that will be paid to the equity shareholders. However, never it has happened that in such insolvency process or the liquidation process, the amount is such a huge recovery is being made through a resolution or through a liquidation where the amount generally lastly flows to the equity shareholder. That is a remote chance that can happen, because if that was the case, that amount was to go to the equity shareholder, in that case company would have never faced stress and company would have not moved on to the liquidation or the insolvency process. Okay, so we are done with the almost the entire process of the CIRP and the liquidation. So if any question we can take up right now, or in we can take in the last. This is the entire process from the initiation of the filing an application of the insolvency process to the liquidation or the downfall of the company, or we could say that it's like a closure of the company as well once this liquidation process is over. Two important things to note is that this insolvency and bankruptcy code is not about the recovery of the money. So, although it starts with the application to get the amount recovered, the main purpose or main fundamental of this insolvency and bankruptcy code is not about recovery. Recovery mechanism is, there are several other laws where recovery mechanism is being done, but this insolvency and bankruptcy code is all about getting the resolution of the company to remove the stress of the company and to get this company take over by any of the other company wherein they can have an effective management, and finally this company remains into being and remains as a going concern wherein the protection of all the stakeholders and all the assets of the company is being preserved. So that is the basic fundamental or basic crux of the insolvency and bankruptcy code. Secondly, it's better to have a resolution of the company than to have a liquidation of the company. So maximum attempts are being done. Maximum attempts are being done by the insolvency professional and by the creditors as well to get a resolution plan for this company, so that the assets of the company are being preserved rather than a company going into the liquidation wherein the assets of the company are being sold and in parts, and the amount realized may be lesser than what would be realized during a resolution process. How to become an insolvency professional is he should have been completed. There are two ways. First is National Insolvency Process Programs that is being approved by the IBBI board, means the IBBI, Insolvency and Bankruptcy Board of India, who have published a national insolvency program as may be approved by the board. So one has to qualify this national insolvency program, or secondly, there are following two routes wherein he has to get a limited insolvency examination. He needs to get the limited insolvency examination qualified. with requisite experience and 50 hours of practical trainings thereof, which have been conducted by the insolvency professional agencies. Uh, Secondly, he should have been completed graduate insolvency program conducted by the IICA, which is the Institute of Corporate Affairs of India. So these are the routes. These are the routes through which insolvency professional can be qualified, and as stated here, limited insolvency examination for persons with requisite experience. So what is the definition of a requisite experience? Is a limited who can appear for a limited insolvency examination is a person who is having a 15 years of experience in management. As we stated, it's not compulsory to have a degree of CA, CS, ICWA, or the lawyer. In if a person who is having a bachelor's degree from a recognized university, and he is having a 15 years of experience in management, in that case also he'll be able to qualify as an insolvency professional. Or he can have a chartered accountant or a company secretary or ICWA or a lawyer who has a 10 years of experience post he has become a member with their respective institute. They can appear for the examination and qualify as a insolvency professional. It's not necessary. It's not that just having a 10 years of experience will make you an insolvency professional. You just need, this is the eligibility criteria to give an examination to secure at least 60% marks, which are examination which is having a negative marking. You need to ensure at least 60% marks, and in that case you will be able to you'll be called as a qualified insolvency professional. Professional opportunities, there are plethora of professional opportunities that have come up post this insolvency professional regime has come up. There are several new avenues that have come up. Is the forensic audits, the valuations part, because forensic audits and the valuation is integral of insolvency and bankruptcy code. So these are the new avenues that have come up in insolvency and bankruptcy code. As already earlier discussed, that because of this company going into the insolvency process, the compliance part doesn't get sent end to. Also, the accounting, the internal audit, statutory audit, the management, the investigation, the fraud detection part, the verification of the claims part, everything has to be done. The taxation part, the income tax, the GST, all these compliances have to be done because of this insolvency process that is going through. Naturally, when all these compliances have to be done, so all the professionals who also not have been qualified as an IPN but who are working with an IP will get an opportunity to work in all these newer fields and newer areas that are coming up. Also, so many interim fundings are being raised by the bigger companies, wherein the corporate insolvency resolution process has to be undertaken. In that case, there is also opportunity of finance to be raised from the banks for these purposes. Transaction advisory, as I said, transaction advisory can be done. Even the supply chain management or the purchases, the sales, and the administration of the entire factory or the corporate premises or the premises where this company is yet into the operation will also have to be done. So there are chances of managerial responsibilities of the managers being appointed by the insolvency profession in this matter. Qualifying as insolvency professional, these are the opportunities. That means he can act as a resolution professional, as authorized representative of the creditors. There are many chances that the committee of creditors, wherein the committee of creditors is there, in that case, few of the creditors of the company are not able to represent in the committee of creditors meeting. So in that case, they will also appoint insolvency professional to represent any of the in any of the meetings. And be present wherever the committee of creditors are meetings is being had. As discussed, they can become a resolution professional, they can become a liquidator. Also, they can become, once you are qualified as an insolvency resolution professional, you can also act as an administrator under SEBI. SEBI is coming up with empanelments of the insolvency professional, and once insolvency professional is being empaneled, they can act as an administrator under SEBI also, wherein recovery of the assets, or wherein the disposal of the assets of the listed companies is being undertaken by the SEBI. appearance of NCLT, you don't need to be a lawyer only just to appear before NCLT or NCLT. Even a insolvency professional can represent any of the financial creditor or the operational creditor or the corporate debtor with the NCLT or NCLT and giving representation on behalf of any of the persons that are mentioned. So this is a newer avenue where a chartered accountant or an insolvency professional or a company secretary who are qualified insolvency professional can appear in NCLT or NCLT representing various stakeholders as well. As discussed, those who are not qualified as an insolvency resolution professional, in that case, verification of claims under CIRP, liquidation and voluntary. So claims are being, it's easier to manage the claims where the claims have been received on a lesser quantity, or if it might happen is that there are several claims in a company that are coming up, like say 100 to 1000 to 5000 to 50,000 claims that might come up in some bigger companies. What in that case, where in their the CRP is a time bound process, and how this verification of claims will be done. So in that case, professional guidance or professional opportunity, in that case professional support is being taken even for the verification of the claim and preparing the list of the creditors for the same. Arrangement of finance during the CIP period can be done. So this is a financial opportunity that is being involved. Forensic transaction audit as discussed. Yes, preparation of the resolution plan. Several resolution applicants are coming up to the insolvency resolution professional, stating that they want to make a professional resolution plan wherein so many factors are involved before taking over the company which is undergoing resolution process. So resolution plans are being made by the insolvency professional. That is a bigger opportunity. Due diligence under section 29A. So resolution applicants, those who have come up, the due diligence under section 29A has to be done, whether these resolution applicants are eligible resolution applicant or not. So due diligence has to be done. So there is also an opportunity. Managing affairs of the corporate debtors as discussed can be done. Secretarial and legal work. So no compliances are to be left out. So naturally the income tax, the GST part, the secretarial and the legal works have to be done. Monitoring and supervision of the resolution plan. So once the resolution plan is being received by the resolution professional, in that case, the monitoring and supervision of the resolution plan has to be done, knowing that this resolution plan that has been received is not in contravention of any law, and the plan is as per the law, so that whenever the company is being handed over to that resolution applicant or to the successful resolution applicant, in that case it is abiding by all the laws of the land. Preparation of asset memorandum or the information memorandum can also be done by the professional, wherein quite complex figures or quite complex information has to be given into the information memorandum, wherein bigger business houses which are undergoing insolvency resolution process. So it's a big task to prepare a correct information memorandum on the basis of which the resolution applicants will be taking a decision to take over the company. We are done with all the processes of the insolvency, the liquidation process, the professional opportunities involved, and all the eligibility of the insolvency, how to qualify as a insolvency resolution professional. This is the entire process. I have tried to take it into a brief of the overview of the entire insolvency code 2016. Although it seems to be a very interesting code, it is, or very interesting law it is rather. And whenever we are doing these practical into a practical approach, we would have handled this so many insolvency processes across the country. It has been so every day is a new process. Every day some new matters are coming up. It's not at all a monotonous work, kind of a compliance work that is happening. So many instances that would have taken place. Even there are several instances where insurances of the insolvency resolution professionals has to be taken, because they are also sometimes at a risk, where because they have to deal with all the aggrieved parties like the corporate debtor, जो directors के हाथ से company जा रहा है, so they have to deal with those directors, they have to deal with the creditors of the company. Although it's although I would not say a risky, but I would say it's just a very thoughtful thought process taking, and it is a very like actively get involved into the CIP process to have a successful resolution process done for the CIP, because thousands of crores of rupees are being involved, wherein the claims are being received from the claimants, and crores of rupees assets are being taken into charge by the interim by the resolution professional. So it's a duty bound on him, although it's not a tough task, but I would say it's a interesting but a very cautious process that is to be followed by the insolvency resolution professional, wherein every day it will be some new variety of decisions will have to be taken when insolvency professional is running a insolvency resolution process. So with this, I end my session here, and Dipti, over to you.
Thank you, Sunit. Such a wonderful presentation. I would. There are few questions in the chat box.
Yeah. Question from Deepak is business loss will be available to the new buyer? As stated, so Section 79, as you're aware, Section 79 of the Income Tax Act states that business loss, if it has to be carried forward or is to be set off against the profits of the company, 51%, not more than 51% of the shareholding should have been transferred to any other buyer. So to get this loss carried forward and further set off against the profit of the business. However, in this case, when the resolution is taking place, where the entire company is being sold and the entire 100% of the shareholding is being transferred, which is obviously more than 51%. So as per Income Tax Act Section 79, this loss will not be available to the new buyer. However, to give enhancement to this resolution process, notification has come up from the income tax in the Section 79 of the income tax itself, wherein it states that although more than 51% of the shareholding has been transferred under the insolvency and the bankruptcy code, the loss will be available to the new resolution applicant. So there has been a notification that has been prescribed into Section 79, wherein even more than 51% shareholding is being transferred, that loss will be available to the new buyer as well. There's a question, does members in service can become IP? Yeah, they can become an IP. It's not at all compulsorily to be holding a certificate of practice or to become an IP or to be eligible to give examination to become an IP. It's only the requirement is that he should be having a membership of 10 years, not a COP of 10 years. So only a member having experience or have completed 10 years of membership, but not having a COP can apply to give an examination and qualify as an IP.
Okay. So any more questions, or else it's time also now, or you have done the session within time? Time is the money. So
yeah.
Can we please stop sharing the screen? Actually, I'm not able to view. Okay, thank you. So Sunit, it was wonderful presentation, like a roller coaster ride, completing IBC in just 2 hours. It's great. In fact, when we had a discussion, I thought how you are going to cover it up, as we have discussed before organizing the session, we will have the from scratch you will cover. So really highly commendable, and you have got good command in the subject. There's one message from Pallavi. can an advocate who is already a bar member to a civil or criminal bar practice as an IP?
Yes, yes. There are four categories of professionals that have been prescribed under the law. That chartered accountant, CS, ICWA, and an advocate. So even advocate, the similar condition is applicable. That is of 10 years. So if he is a bar council member for 10 years, as I said, he should be completing 10 years in their respective councils or the institutes. Like for us is the ICAI, so for them is the bar member. So if he is a bar member for continuously for 10 years, registered advocate, he can become an IP. He can become and practice as IP.
So I think here we can how to inform to income tax or GST department to claim their livelihood.
Yeah, so once the RP is into the charge of this the entire corporate data, he might be in charge of the several documents that he might be holding. So from the corporate data's addresses and all and the place of business, they need to get the jurisdiction of the GST or the income tax. RP has to write the letters to the income tax and the GST department attaching the order stating that this company is into the insolvency. So if and giving the GST numbers and the PAN number to the respective department like income tax and the GST and stating that this company is into the insolvency and I am the resolution professional. So if any of the claims that are being that are required or that are due from this corporate data by the GST or the income tax department, they can just come and file up the claim to me. So this is the formal letter we can issue to the GST and the income tax department.
Okay, is there any time limit for that? Timeline?
Timeline, as I said, claims are to be submitted within 90 days of the initiation of the insolvency process. So within 90 days, these claims have to be submitted.
I think you have covered a lot about this. So on behalf of all the participants and Gyanstation, I extend my heartiest vote of thanks to you, Sunitji, and we would like you to come more on the platform to enlighten about this IBC code. And I really thank you for such insightful, crisp explanation of IBC 2016. It's like a Herculean task to cover IBC from bare law to the process to practical application to case studies, litigation, and to requirements to be an IBC. So you have not left any stone unturned to explain it to your best. So here I can quote just few words of Abraham Lincoln came in my mind that no organic law can ever be framed with a provision specifically applicable to every question which may occur in a practical administration.
Correct.
No foresight can anticipate, nor any document of reasonable length contain express provisions for all possible questions. It's only through when we do it practically, we come to know a lot about that. And no law can cover all the possibilities and practical applicability of the act. But in contrary to this, I would like to say that our expert Sunit ji has very well justified today's topic, multiplying the impact of the session with his practical professional experience. Here I extend a vote of thanks from the bottom of my heart on behalf of all the participant viewers and Gyanstation for all the efforts you have put in today's session. And I'm very sure that the information which we have gathered from today's presentation is going to go long run with all of us. Wherever we are going to hear the word IBC, we all are going to remember today's IBC session and the knowledge shared by you. So here I would like to highlight that at present in India, there are 4,540 live cases that are admitted into corporate insolvency resolution process under IBC 2016, right? Right, Suniti?
Yeah,
and as per statistics, only 1,107 registered IP are there in India. So there's a huge scope and professional opportunity in this area. So I would like to say to our professional brothers and sisters, so please explore this area. And Sunit ji is always there with us to
Yes.
guide us in this. I'll keep calling him on Gyanstation with more courses on IP. And with these words, here we end Gyanstation today's session on overview on IBC 2016. Stay tuned with Gyanstation for more informative sessions like this. Do subscribe to Gyanstation YouTube channel and Telegram channel for regular updates. Don't forget to spread the message with your friends, colleagues, staff, and to everyone around. Together, we all should grow, and Gyanstation is always your growth partner. So here we end our today's session. Thank you very much for joining us. Thank you.
Thank you. Thank you so much. Thank you to all the participants. Thank you, Dipti ji, for calling me on this absolutely fantastic work that you are doing, accumulating people, accumulating the professionals, and trying to get good speakers wherein a dissemination of the information and the various new topics can be done. Although insolvency is a big law, what we can do is we can next session that you can do is like having a certificate course kind of a thing, wherein not only me, we can plan several